Vaibhav. In today's session of Visual Jforex, I will be continuing with the demonstration of the algorithm development using linear regression intercept. This is the third part, and in which we will be building on the sales side. In prior two sessions, I had initiated the setup, and then I had also gone on to build the buy side. And in today's session, all we have to do is complete the unfinished setup. So far, the instrument subscription has been done. The instrument of choice for this algorithm is Euro USD. So all these default instrument variable is going to use the Euro USD. And then I had got this linear regression intercept blocks and the historical candles of 15 minutes each, as well as 10 seconds to pinpoint the exact entry and exit points. For the buy side, I had defined certain conditions where we will be looking into the volatility. So these calculations have been done to make sure that there is enough of volatility, enough of momentum on the desired side before the execution of the trade. And here on the lower side, these conditions have been defined using the if-else block, which needs to be fulfilled before any buy side trade can happen. Now for this session, we will be getting started for the sell side, and I will give you the brief idea how the logic is going to be for the execution of the sell trade. So here, this is the Euro USD chart defined for 15 minutes, and the idea is that there should be enough of momentum on the sales side. So for a setup something like this, we will be looking at the volatility, the decline which we have observed in the last historical candle of 15 minutes each. So for the initiation of the trade, the last 15-minute candle should have closed with the difference between the opening price and the closing price of at least 5 pips, and the prior candles should have closed above this linear regression intercept. And as I said, there should be, as I had said for the buy side, there should also be good enough difference between the linear regression intercept value and the closing price of this historical candle. So here we will do the difference calculation also, where we will need to subtract the closing price of the historical candle from the linear regression intercept output value, and that difference should be of at least 10 pips for the initiation of the trade. And also this linear regression intercept is needed to have risen from the prior levels. So as a result of this sudden move, sharp move on the lower side, we need the linear regression intercept to diverge in the opposite direction. So when there is price move on the lower side, it should be going up as a result of this sharp move. And for that, we will also be comparing the linear regression intercept output value to its value a couple of candles back. So we will have to set that condition as well. Now we head to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. So here for the sales side development, we need to define two conditions, two calculations, where we will be taking into consideration the price action in candle 16, which is the 15 minutes candle with the shift value, that is the look back period of 1. So here we need its closing value to be lower than the opening value by at least 5 pips, and also the difference between this candle 16 close and the linear regression intercept output value with the shift 1 of 15 minutes, which is the line 13, it needs to be at least 10 pips. So for defining the pip values, we have already done the calculation in the prior session. So these two calculations which we are also going to use in the sell side. So all we need to do is now define these differences, carry out the calculation for finding the differences, and then we will be comparing those results with these output values for the calculation which we have already done. So now for the today's session, we will also have to go back to the components section and get two calculation expression blocks. Okay, here I will need to break this flow for the time being and join it to next blocks. And now I will retrieve the candle 16's closing and opening value. Auto created variables, candle 16, its closing and opening price. We will be deducting its closing value, which is going to be lower from its opening value. So here A1 minus A2, A1 minus A2, and this will be the closing opening difference, and then we will define other condition where the difference between the line 13 and the closing value of candle 16 needs to be more than at least 10 pips. So again here this calculation is going to be A1 minus A2, and this I think we can name it difference of linear regression and historical candle. Okay, DLH, I think that should be good enough. Now I need to get the trade flow going. For that I need to join it here, and we will now need to get a couple of if-else blocks. Components, logical, here the linear regression value needs to be rising. I will set that as a first condition. There should be divergence in the direction of the linear regression intercept and the price action. Line 13 needs to be greater than line 15. First input greater than second input. And then comes second condition, which is that prior candles should have closed above the linear regression intercept at that point in time. So we will be taking this shift 18's closing value. 18 is the candle 18 is the 15 minutes candle with the look back period of 3. Candle 18, and line 15. Oh, line 15 and candle 18's candle close. And this also needs to be first input greater than second input. Then comes looking at the difference, and also we will have to look at the difference between the linear regression intercept and the candle close, which is candle 16. So here we will have to take calculation results, and first we will do is compare this EOD, closing opening difference for candle 16, with HCD. I think yes, HCD should be the result of the calculation with 5 pips. Let me see what is the MPD value. Okay, we need to make sure that there is enough of volatility. The difference is at least more than 5 pips. Now this if block needs to be connected to next one with first input needs to be greater than second input. Then we will be looking at the difference between the linear regression intercept and the candle 16 candle close, and this needs to be greater than 10 pips. So DR. Okay. First input greater than second input. Now let me join and arrange these blocks. Okay, and we have to make sure that our setup is symmetric. So these conditions need to be the inverted copies of each other. Now we also have to make sure that last 15-minute candle has closed below the linear regression intercept value. So candle 16 candle close should be below line 13, and then comes the point of defining the exact entry and exit, which is going to be the last 15 minutes candle close. Whenever the price starts to drop below that, the new sell trade should be initiated. For that, all we have to do is compare the closing values of candle 19 and candle 20. Candle 16's close needs to be the common condition, second variable, and candle 20 should have closed above it. And candle 19 needs to close below it. This first input greater than second input. First input less than second input. And then I will have to take the open at market block, and we are almost done. Okay, now comes trading block. Open at market, we will be going for the market execution. So as and when the condition gets fulfilled, the trade will be initiated then and there. This is going to be sell side trade, and first input less than second input. Default instrument Euro USD, trade amount, you can change it to any suitable amount depending on the equity. Slippage, default value is 5 pips, but personally I think 2 pips is good enough. Stop loss and take profit. Now this setup is dependent on the 15-minute time frame. So I think we need to keep the stop loss and the take profit price fairly sharp. We can't really be expecting big moves with the help of this 15 minutes time frame. This is more suited to the intraday time frame. So as a result of that, I think the stop loss take profit combination of even 10 pips, 20 pips, that is with the risk reward ratio of 1:2 should be good enough, or even you can cut down on it and go for the stop loss of like 6 7 pips also. So you will have to run the historical test on this algorithm to see what is the appropriate level of stop loss, take profit depending on historical volatility. So you will have a better idea. So for example, I'm taking 7 pips as the stop loss and 15 pips as the take profit. There is nothing sacrosanct about it. You can change it. You can go for different combinations also. You can also look at the volatility of the underlying instrument and define the stop loss and the take profit accordingly. But for this session, I'm not utilizing any further calculation. We will be keeping simple this time around, and maybe in next session when we will be working on any different combination using the different indicator, we will see how we can do that as well. That's it from my side for today's session. If you have any idea or any query, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. So here the algorithm is finished building, and you can take a look on the final product and see how you can build it on your own account, and then do the historical test also to see if it is profitable or not. Only after that we will be able to say that it is useful for the live account or not. And these sessions are simply for the demonstration purpose, so no claim is made regarding the profitability or otherwise of the algorithm. These are for getting to know the Visual Jforex platform more, and then you can build your own algorithms using various combinations possible within this framework. Thank you all for joining in. Have a fabulous day ahead. Do subscribe to the Dukascopy webinar channel. See you next time. Till then, goodbye.